Good morning, everyone, and welcome to our fourth day of learning from the Presbyterian Foundation. My name is Maggie Harmon, and I'm going to be your host for the day. I'm one of the Ministry Relations Officers from the Foundation, and welcome everyone wherever you are. We have over 500 people registered, so it's going to be a well-attended day. We're looking forward to all of the information and the experts that we have that are here to share this with you. Let me give you a couple logistical notes before we get started with the content. We have 3 programs today at 9, 11, and 1 Pacific. I'm on the West Coast, so now I have to do that math, but you can see it there on the screen. That will be at 12, 2, and let me get this right, 4 Eastern time. So we will have about 30 to 45 minutes of content in each one of our presentations. Then we'll have a break between the end of that and the next presentation. And at the very end of the day, after the last presentation that we will have a Q&A where I am taking all of the questions that you put into the Q&A box at the bottom of your screen, and I will be curating those and asking a couple of our panelists to answer those questions. So please, throughout the day, whatever programs that you are able to attend, go ahead and put your questions in the Q&A, and we will be gathering those all day long. Finally, lots of questions about, will this be recorded? Yes, it is. We are recording it right now, and it will be made available after the program. It may take us a couple days to get everything ready, but it will be available after the program. Look for a follow-up email from Zoom that has a link to where you can get those recordings. And of course, if you have questions after this, your ministry relations officers are a great resource. So I would encourage you to reach out to us, and we can help with any questions you may have following the program. With that, let me start by sharing with you a prayer to just set the tone for our day that comes actually from a book I'm reading right now called Seeking God by Trevor Hudson. So let's just pause for a moment to reflect. Lord Jesus Christ, your good news has found its way into my heart. Thank you for the divine life that your own life, death, and resurrection make possible for me today. I have caught a glimpse of what this life looks like in your own life, and I yearn to know it for myself. Today, I turn toward you, trusting that this is your vision for my life here on earth. As I learn what it means to seek you in the life you give, may your Spirit show me my next step. And with those inspirational words of seeking and encouragement, I thank you all again for being here and for all the work that you do to support your congregations and ministry wherever you find yourself right now. I would like to welcome Robert Hay, our first presenter. He is a Senior Ministry Relations Officer with the Presbyterian Foundation. And if you want to talk to someone who is really an expert in how to do church budgeting and how to manage all the details of church finance, Robert is your guy. So we are thrilled to have him here speaking to us about church budgeting today. Robert, please take it away.
Great. Thank you, Maggie. Give me one moment. I'm also the person who's pushing all the AV buttons on the back. So I've got to undo the spotlight on Maggie. There we go. Good. Well, thank you all for joining us today. Again, I am Robert Hay. I'm the Ministry Relations Officer serving the Southeast region of the U.S. I'm a ruling elder, but my background is as a CFO of a nonprofit. I have a master's of public administration in nonprofit management, and before joining the foundation, I worked as a CFO of a couple of nonprofits, but I'm also married to a pastor and very engaged in my local church. And as I've traveled the Southeast over the last 11 years working with churches, I've come across hundreds of different formats for church reports as it comes to finances, and would like to spend a few minutes today talking through maybe some best practices related to finances and reporting of finances, with the goal of helping us to understand better our church finances so that our church finances don't control us because we don't understand them. So I'm going to share my screen. And the host, who is me, disabled screen sharing. So all right, let's see if I can share my screen now. There we go. All right, hopefully you can see my screen now, and you can see the title slide for my presentation. Well, let's just dive right in. So I came across this picture of a piece of money a few years ago, and I think it really expresses a lot of what many of us feel. This I am a piece of paper and I control your entire life. And money really makes the world go round. Unfortunately, oftentimes in the church, we let money control the church. But good stewardship of resources means that we should maximize what we have been given in order to do mission and ministry. And we can't do that if we don't really have a good understanding of our money. And one of the problems that I've encountered oftentimes in churches is that we have really confusing reports. And on top of that, we oftentimes have this air of secrecy about money. Only a few people control the money. A few people control the information about it. And oftentimes we really trust just a few people to make good financial decisions for the church. But this keeps us as leaders, clergy and lay leaders on session, really from being able to lead if we don't have a really good understanding of our finances. So, we should be moving towards a place of transparency, and not just transparency. Transparency is not enough if you don't understand the reports. So hopefully today we can begin to learn a little bit more about what to look at on these reports and maybe some best practices on how to simplify those reports. So let's start with this definition of fund accounting. You probably have heard this in the church. Most churches use this form of accounting. And really what fund accounting is that we separate the restrictions or designations for each pile of money into separate funds. Not separate bank accounts, but separate funds. And we manage that on our general ledger. We'll have different ledger accounts or funds on our general ledger to maintain the different designations of money. And most churches typically have one main operating fund for their general income and expenses, and then typically separate out all of the other funds for each restricted purpose. So let's take a look at what some of those funds might be, some examples of some of those funds. As I mentioned, the general or the operating fund is typically the main fund that all of the income and expenses flow through. And this is the one fund that we really should pay attention to all the ins and outs and report on all the ins and outs on this fund. I encourage churches to also have what oftentimes is called a reserve fund. And in the reserve fund, this is where you would accumulate your surpluses or your deficits. Now, oftentimes churches think, oh, we're a nonprofit, we're not supposed to have a profit. But that's not what nonprofit means. We should be trying to achieve a surplus and building up some reserve, because there are going to be years when we're going to have a deficit and we're going to need to balance it with some church reserves. So that's what the reserve fund is. It's the money that we set aside at the end of the year from our surplus or surpluses over multiple years to build up the reserve fund for those years when we have deficits and we need to borrow from our reserve fund. Now, the building equity fund, not every church has a building equity fund, and not every church needs a building equity fund. In for-profit accounting and even in other nonprofit accounting, entities would account for their property and then would account for depreciation of their property. And then the building equity would be the value of their property minus their depreciation minus any debt obligations. But in the church, unless you have debt, there really is no great reason to have to put this on your financial reports. We're not oftentimes planning to sell our property, so tracking the value of our property oftentimes just confuses our financial reports. Again, unless you have debt. If you have debt, then you probably should be tracking this. But if you don't have debt, then I would encourage you to just take these things off of your financial reports to try and simplify them. And then, of course, we've got donor restricted funds and board designated funds. And the difference here is who designated it. A donor restricted fund, you're legally obligated to have to continue to follow those designations. But board designated funds, or what we will talk about as session designated funds, are set aside by session. And so those designations can be changed based on session's direction. All right, let's talk a little bit about the type of accounting that we normally do. You've probably heard this mentioned as well, cash basis. In the church, we typically use a cash basis of accounting instead of an accrual basis of accounting. And so what that really means is that we recognize income when it comes in, when it is received, when it is actually paid to us, the date it hits our offering plate and we take it, that is when we recognize it. And same thing with expenses. We recognize the expenses when we write the check or make the payment of the expense, which is different than accrual accounting. In accrual accounting, oftentimes what you're doing is you're recognizing income when the sale occurs, but maybe not when you get paid for it. And the same thing with expenses. In accrual accounting, you recognize an expense when you incur the expense, maybe not when you pay for the expense. So churches, we use this cash basis. Money in, money out, that's when we account for it. And that's really all cash basis means. Now we're going to look at 3 different types of reports today, and we're going to look at some examples, and we're going to dig in and see how I normally would read those reports, and I'll point out some things as we go. But the first one we're going to look at is a statement of financial activity. That is the technical term for what many of us call a P&L or a profit and loss statement. So you will hear me calling it the P&L or profit and loss. That's kind of the normal vernacular for it, but it is technically called the statement of financial activity. It shows the income and expenses for that one main operating fund. So that's that one fund. And then we're going to look at a designated funds report, because we're looking on the P&L at just the operating fund, but we should be looking at the balances of all of our designated funds. We don't necessarily need to look at the details of all of those funds, but we need to be looking at those balances and maintaining a good understanding of what is in all of those other designated funds. And then we also should be looking at the technical term statement of financial position, which is also often referred to as the balance sheet. And the balance sheet shows you a snapshot of the church's assets and the balances, the fund balances at a specific point in time. So we're going to talk through those. In order to talk through those, we're going to use a fictional church of First Presbyterian Church of somewhere, and we're going to make some assumptions. We're going to look at some reports as of the end of the 3rd quarter of this year, so September 30th, 2022. We're going to see that they have some bank accounts, some savings, investments, and we're going to look at some different types of funds. So let's look at a report. This is the statement of financial activity, again, also known as the P&L. You can see as we look at this that it says statement of financial activity and the church's name is at the top. If your church's name is not at the top of your reports, I highly encourage you to add it to the top of your reports, just so that we can be clear about which entity we're looking at when we look at reports. You will see there are several columns here. There's an actual, there's a budget, and there's a variance for 2 different time periods. One for the current month. So those first 3 columns would be for the month of September. The next 3 columns say YTD, which is year to date. So those would be for year to date. And then there at the end is the annual budget amount. This is a pretty good snapshot report, P&L of the main general fund. Now, I've worked with a lot of churches that have a report that looks like this, but as you look down at the bottom, you'll see a whole bunch of detail. And we're going to talk about that in a few moments as to whether or not that's a good approach. Let's talk quickly about the difference between actual, budget, and variance. Actual is what was either income that came in or expense that went out in that month. Budget is what we budgeted for that month, which is typically our annual budget amount divided by 12. And then the variance tells us how did we do against the budget. And we'll look a little bit more at that. A negative variance in these columns is bad. A negative variance for income means you have not had as much income as you budgeted for. And for expenses, it means you have spent more than you budgeted for. So let's dig in a little bit further here. So let's look at just the kind of the top part of that P&L. We're going to look just at income for a moment. So let's talk a little bit about these different categories. You see, I'm showing 3 categories for giving. And I would encourage you to consider having these 3 categories. Most churches have 2 of these categories. I would encourage you to add the 3rd one if you don't have it. And those 3 categories are pledges, non-pledged, and loose offering. As you can see with pledges, what we're talking about is any giving that came into the church that could be matched to a person's pledge. So Sally pledged to give $500 a month. When Sally's $500 a month comes in, it would be accounted for as pledged income in the pledges income category. Now, non-pledged would be giving that can be matched to a person, but not to a pledge. So maybe Jim doesn't turn in a pledge card each year, but Jim still gives $300 a month. And you know that Jim is giving that $300 a month because he's either doing it with a check or he's doing it through your online giving. You are able to tell when Jim's $300 come in. So I would encourage you to track that as non-pledged giving that you can track to a person, but not to a pledge. And then loose offering is basically everything else. It's all the cash, all the other giving that cannot necessarily be matched to a person or to a pledge. Now, why these 3 different categories? Why not just have one? You certainly could have one, that would be fine. But if you're going to break it out at all, having these 3 makes sense because one of the trends that we're seeing in giving is fewer and fewer people filling out a pledge card. And that trend is going to continue. We're going to see fewer and fewer people pledging. But what we also see is just because people aren't filling out a pledge card doesn't mean they are not giving. So we should be looking at historical giving patterns as we build the budget anyways. And we would like to track based on what we think someone was going to give, whether or not they gave that. And that would help us as we build our budget and track against our budget. Of course, occupancy related, that could also be called rent on your income. And then investments would be income that you actually realized from your unrestricted investments. If you have those, if you've got an investment that has no restrictions on it and you decide you want to draw some of it off, whatever you draw off, what you actually realized from it, not the unrealized gains or losses, but what you've actually realized and flowed through your operating fund. And then same thing with your endowment. This would be the income from your endowment that you flow through your operating account. So that's income. Let's look at expenses for a moment. So I would highly encourage you as you build your reports for your session and for your pastor to roll up all of your expenses to functional areas. I oftentimes see church reports that are 3 and 4 and 5 pages long of expenses in the operating fund. And under every category, you can see, where every penny was allocated. And that's just too much information for your session or your pastor to have to quickly digest. So I would highly encourage you roll up all of your expenses to these functional areas for your reporting. Now, your finance committee, your treasurer, they're going to need to see those detailed reports, but your session, your staff, probably just rolling up to these top expenses, these functional areas would be the good best practice. And typically we talk about expenses in three ways. You've got the three P's: people, which are all your personnel costs, including benefits; place, which is all your building and utility cost; and then programs. And so programs typically gets broken down. And as you can see on this example, programs get broken down to worship, Christian ed, pastoral care, whatever those programs that you can roll up to higher functional areas would be. And then, of course, you're going to have something called miscellaneous that is kind of the catch-all for everything else. So when we look at the P&L, we have income on the top, expenses on the bottom, and that leads us to something oftentimes called the surplus or the deficit, or sometimes called the profit or loss, which is where this nomenclature of profit loss comes from. And so this is just the really basic math. You want to take that total number of income, you would subtract it from your expenses, and if you have a positive number, then you got a surplus. If you got a negative number, then you've got a deficit. But oftentimes, just doing that math isn't enough to know what the issue is, because sometimes you can have a surplus because you haven't spent the money that you budgeted to spend, or sometimes you could have a deficit because you've spent more than you planned to spend. And so just simply looking at that one number doesn't tell you the whole story. So let's look a little bit more detailed at this example of first somewhere. And let me show you what I look at and see if that may help you see how you can dig in a little bit more on some of these things. So when I look at this P&L for the First Presbyterian Church of Somewhere, my eyes immediately go to these highlighted numbers, which are the variance numbers for the income and the expenses, and then the surplus and deficit. My eyes immediately go there and look, and I want to see how far are we off from our budget. And so you can see with this on income, there was a variance of $3,674. So a negative variance, which means we're behind on income to date that we have budgeted for. So I would want to then start digging in a little bit and see, why are we behind? So we're behind slightly on giving. You can see here you've got 49,000 compared to a budget of giving. Again, that variance there of $500. Non-pledged, loose offerings. See, we're behind in all these categories. And then down here on investments, it looks like we budgeted to draw from our investments, but haven't done it yet this year. See, we've taken nothing. And then we've also got a positive variance on our endowment. So what this tells me is that we budgeted to draw $5,000 off our endowment. It looks like we did that earlier in the year, and that's a pretty normal practice. People draw off their endowment early in the year, maybe in the first quarter. So it looks like we've taken all of that already. So we're behind, but not as far behind as we really are reflecting, because we took our endowment draw early in the year. Now, if we flip down to the expenses, we see some interesting things on the expenses as well, right? So on the expenses, we've got this positive $12,000. So this looks good. We must be controlling expenses really well. We're ahead on budgeting thus far. But if we begin to look at the expenses a little bit further, we're actually over expenses on place. We're over expenses to date on Christian ed. And then the majority of this positive number comes from mission and miscellaneous. And so it looks like we budgeted $12,000 for mission, but we haven't done any of that yet this year. We should have done 9,000 of that this year, and we haven't done it yet. And that's pretty typical as well. Churches oftentimes will pay their mission giving out in the fourth quarter. And so you can see how this number of an $8,000 surplus is actually a little bit misleading, because if we had actually given away the $9,000 we had budgeted year to date, we would be running a deficit right now. And if we hadn't taken all of our endowment draw, we would be running an even larger deficit. So let's move on a little bit and look at the designated report. So this is the designated funds report. Most churches, as I said, only run that P&L for that one operating fund. So for the designated funds, typically we want to keep track of just a few things to help us understand where we are with designated funds. And a much simpler format where you list all of them. So let's look a little bit further into just that top part of that report, which are the true designated funds. You've got session designated and donor designated. I would encourage you to keep track of those separately or be really clear about which funds are session designated or donor designated. If you can show them on the report separately like this, that would be the best practice. If you can't, if you could maybe name the funds in a way that lets you know that they're either session or donor designated, that would be a good best practice to help you know which ones you have control over and which ones you don't. A couple of other good best practices is to track the ins and outs. That's really what we're tracking here. We want to know what the balance is of these funds and how the balance has changed over the course of the year. So you can see, maybe this church decided to do an AV upgrade. They had $5,000 given. They have spent $4,500 of that, so they've got about $500 left in that AV upgrade session designated fund. So that tells the session, have we finished that project? If we finished that project, that's $500 that we have session designated that we could move somewhere else because that's session designated money. I would also encourage you to keep the date of inception on these reports. This really helps you keep track of when this fund was opened. It helps us remember why it was opened and helps us to keep track of that. And then the other best practice that many churches don't follow that I would highly encourage you to start following is to have a one-page document for each one of these designated funds. And on that one-page document, I would encourage you to list the title of the fund, who designated, what the restriction was, the initial amount given or designated, the date, and some notation of is it's temporary or permanent. And then that's a cover page, and then that should be in a file. And behind that file, that cover page in that file should be other documentation to back that up. So if it was donor designated, having a copy of the gift letter or whatever note came from the donor, a copy of any gift receipt, a copy of a payment document, the cleared check or whatever. And then if you took action on that donor gift in your session, putting a copy of that action or session minutes in that file is really helpful. If it's session designated, then absolutely put a copy of those session minutes in that file as well. I would encourage you to annually review this one-page document for all of your designated funds at the session level. And that may seem a little overwhelming to do that if you've got a whole lot of funds, but it would be really important to help remind and educate the leadership on the purpose for all these funds, rather than counting on anecdotal stories or someone's memory or oral history. You don't know how many churches I've walked in where they have told me why this fund is designated. And then after we've worked with them to look through and dig up files, we actually learned that it's not designated the way they've been telling themselves for a decade that it's designated. And so a good best practice of having this one-pager report and reviewing it annually with the session will really help to alleviate that problem. And it will help empower the session to be able to make good decisions about the money that it has designated. So let's look at the endowments part of that designated sheet. So you can see here we've got a couple of endowments at this First Presbyterian Church of somewhere. I would encourage you to first have an endowment policy document. And in that document, define the restriction on each fund, define what we call our investment policy statement, which is your investment approach, and define the spending formula or how you are able to draw off of those funds. And you can see on this report here that, again, we're keeping track of some of the same things. We're looking at ins and outs, contributions, withdrawals. Oftentimes, because endowments are invested, we may want to keep track of the unrealized gain or loss so that we can see what the real balance is. Again, unrealized is an important word here because you don't really realize a gain or a loss until you actually draw off of your investment. So keeping track of your unrealized gain or loss here just helps everything to balance. And then if you consider only a portion of your endowment to be restricted, which oftentimes churches do, oftentimes they'll say we only have a restriction on the original principal that was given, then keeping track of that in this report also helps your leadership to see how you're doing on your endowment. I would encourage these numbers on your endowment and your investments. If you have investments, update your balances and your gains and losses quarterly. Churches don't need to do it any more often than that. Doing it monthly is just busy work that doesn't help the session really make good decisions. So update those balances quarterly would be good, and then review your investment policy annually. All right, so let's look at that last report, which is the balance sheet or the statement of financial position, as it is technically known. This is this shows your assets over your liabilities. That's really, and the top of this report must balance with the bottom of this report, and that's why it's called a balance sheet. And as you can see up here at the top, the assets are the balances of all of your accounts, your bank accounts, right? The assets, the balances of your bank accounts, which don't necessarily track with your fund balances. Those are at the bottom. So up here on the top under assets, you see how much we've got in these accounts: checking account, savings account, or investment account. So that's the balance of those accounts. And then as we move down, if you have some liabilities like a payroll or accounts payable, most churches don't have much of that, but if you do, that would be kind of at the top. And then where you really get into the meat of this balance sheet is when you look down at the bottom at the net assets. Oftentimes this will be called fund balances. And so that's exactly what this is. This is a list, the balance of all of your designated and undesignated funds. And so you can see here that we've got an unrestricted amount that is not accounted for in any of these other designated funds. And then we've got the general fund, which is the one, if we went back and looked at the profit and loss statement, remember it had about an $8,000 surplus at that moment. And so you can see it's got an $8,000 surplus reflected here. You've got your designated funds. So if we went back to the designated funds page, you would see that as the total of the designated funds. Here we are, $29,950. And then you can see the permanently restricted. If you recall on that endowment report, that was the amount that was permanently restricted. And see, this is different. This 75,000 is really easy to see is different from this 86, which is the balance of the endowment account. And that's how we look at this. As you see, there's no property listed here because this church didn't have debt. But if you did have debt, you would have property listed up here as an asset. Then you would have your debt listed here in the liabilities and net assets area. And then down here at the bottom, you would have that building equity fund that would balance all of those things. So one thing I'd really like to point out is this piece about unrestricted or reserve money. You don't need both of these categories, but you do need a place that you can quickly look and determine what money do we have that isn't restricted. And so I typically encourage churches to have that reserve fund and move all unrestricted money into that reserve fund. This church is an example where they do it both ways. They have some that they have moved into that reserve fund that was listed on the designated report. And then they've got some that is just marked as unrestricted and shows up as the unrestricted balance. So let's look a little bit more at fund balances. So that general or operating fund should always reset to zero at the beginning of the year, at the beginning of your fiscal year, right? So you should run surplus and deficit in that one fund. It will go up, it'll go down through your months, through your fiscal year. When you get to the end of the fiscal year, if you have a surplus, then you should take that surplus and move it to the reserve fund, effectively starting your next fiscal year with a zero balance in your operating fund. And the opposite is true if you have a deficit. If you lost $8,000 and you've got a negative $8,000 deficit, well, you need to balance that operating fund and bring it back to zero. And you do that by moving from that reserve fund or that unrestricted fund, or from somewhere you move money as a session over to your operating fund to bring it to zero. But all your other funds, all your other designated funds, your endowment funds, those balances roll over year after year after year. So it is just your operating fund that should go to zero, and you should make it go to zero by moving money either out to a designated fund or into your operating fund from a designated fund. So let's look a little bit more at this unrestricted and reserve piece. This is a really important piece that oftentimes, or we've made our reports so confusing, session doesn't know. They don't know how much money they have that's not accounted for, that's truly unrestricted. And so this is why I really encourage having one reserve fund where all of your accumulated unrestricted money kind of gets put in that one reserve fund. Again, this church does it both ways by having both an unrestricted fund and a reserve fund. And so you could see here by looking at those two numbers, this church has roughly $68,000 of excess cash that is unrestricted. As I said, you don't have to do both of these, unrestricted and reserve. I would encourage you to do one of these, but you can do both if that's how you prefer to do your reports. But if you do both, make sure you educate your session of where they need to look on these reports to figure out what is their truly unrestricted cash excess. So those are kind of the three basic reports that I would encourage you as a pastor, as a session, to really simplify and be able to clearly understand. It may take some work to update the way you've been reporting, to maybe simplify those reports, but it is a practice that if you would go through simplifying those reports and then take some time with your session and your pastor, your staff, to help them understand where to look on these reports, going forward, you'll have a much more educated leadership who can make more informed decisions. Now, there are some things that your finance committee should be doing. And I would encourage your finance committee to be looking at even more detailed information. So I showed you a rolled up profit and loss. I would encourage your finance committee and monthly to be looking at all the details of the profit and loss, and to be tracking really where are you over and where are you behind. And they need to know that so that they can help make informed recommendations to the session. There's something called the check register. This is basically a printout of all the checks that the church has written. I would encourage the finance committee to review that each month. I would encourage you to review the bank statements. And then there's this thing called the reconciliation report. And a reconciliation report is what your bookkeeper should be doing when they essentially reconcile the ins and outs, the deposits and the checks they wrote out of the accounting system with the bank statement. And so a reconciliation report shows what hasn't reconciled yet, so that your finance committee can have some insight into maybe what checks have been sent out that we're still waiting to be cashed. these things are really important. These check register, the bank statement, the reconciliation report are really important for your finance committee to be reviewing. The language I like to use is we should be trusting our treasurer, we should be trusting our bookkeeper, we should be trusting our staff to be doing good things with the finances of the church. So we should trust, but we need to verify. And I encourage you to do that verification step, not as a punitive thing, but really as a way to kind of help ensure that everything is above board. I have too many examples of churches being too trusting and someone taking advantage of that. And we don't want to get to a place where there's any malfeasance going on in a church. That's not a fun process to work through. Quarterly, I would encourage your finance committee to review investment statements and endowment statements. And then annually, absolutely would encourage your finance committee to review the investment policy statement, all of those designated funds, and to do what we call a financial review. A financial review is not an audit. It's a step below an audit. So an audit is a technical term for a really in-depth look at your finances. I would encourage you as a church to maybe engage an outside audit firm, every few years to do an audit. But on those years that you don't engage an outside audit firm, I would encourage your finance committee to engage in a financial review process. And I have some examples on how you can do that in a few moments. So let's talk about budgeting for a moment. But budgeting really, we should be looking back. Historical expenses, historical giving data are much better predictor of what's going to be given and what our expenses will be going forward than any information we may gather from a pledge card or even from a committee chair who is saying, this is what I want my budget to be, right? So start with your historical giving patterns, your historical giving information, and your historical expenses. That should be your starting point for building your budget going forward. And then, if you're a church that goes through a pledge process and receives pledge cards back, use those pledge cards to adjust any assumptions you made. And then adjust your expenses based on any other information you may have. Right now, we know costs are going up, utility costs are going up, inflation's going up. So adjust your expenses based on the information you have. And then I really encourage churches to model being a good employer. We should be budgeting a cost of living adjustment every year. If you haven't given raises to your staff in a few years, your staff have gotten pay cuts, particularly over the last 2 years with record inflation year over year. So I would encourage you to model being a good employer. We don't need to take advantage of our employees and who will say, no, you don't have to give me a raise. We should be keeping up with cost of living adjustments every year. So make sure you're budgeting for that. If you do have endowment or investments, make sure you calculate and budget to take that draw. Oftentimes churches won't calculate or that unless they actually need it. I would encourage you to calculate and budget to do it, and then later decide if you don't need it. So at least you've built that into the budget so you know what you could have taken. If you decide later to not take it, you make that decision further down the road. But put in the budget what you could take. And then, of course, the next step after you've done a detailed budget is to create a narrative budget. And as many of you listening today know already, we've got resources at the Presbyterian Foundation to help with that step from going from a detailed budget to creating a narrative budget for stewardship. So I got a couple of resources for you. These are some wonderful books for pastors. I would encourage you pastors to pick these books up. So I have both of these right here. They're up on the screen too. Ministry and Money and Church Finances for Missional Leaders. Both of these books do a really good job of connecting for a pastor, maybe the technical pieces of church finances and connecting it with the missional or theological piece of how we do that and use that information in the church. So those are two great resources I would recommend to you. And then I've got 3 more books I would highly recommend for treasurers and maybe even finance committees who want to get a little more information. It's these 3 books. And again, I've got all 3 of them sitting here with me. These 3 books are all by an author by the name of Ed Breeden. Ed is a PCUSA member and treasurer, and he's done a fantastic job of putting together some resources that really take the highly technical information and boil it down where it's really easy to understand for a volunteer treasurer. So I would highly encourage these books. You can get all these books online, and I would encourage you to get these books and just make them part of your church library that you then hand to the treasurer every time you get a new treasurer. And then a couple more other resources for you to consider. There's this thing called the Financial Review Checklist. So one of these books by Ed is called The Volunteer's Audit Guide for Churches and Other Nonprofits. This is actually a workbook that would help you do that financial review. This is a great resource. But also there's a document that's been put out by the PCUSA that you can find on the PCUSA website called the Financial Review Checklist. If you go to pcusa.org and go to the search bar and type in financial review, it'll be the first thing that pops up. It's a PDF document. It will walk you through all of the steps that you may need to do for a financial review. So that's a wonderful resource for you. Your Presbyterian Synod staff, there's a treasurer at your Presbytery and at your Synod. These folks oftentimes know a lot more about treasurer and reporting than I do. So please reach out to them. They would be very helpful to you. And then, of course, your regional ministry relations officer through the Presbyterian Foundation, we would be happy to help. And then we've got 2 other online resources that we would encourage you to check out. The Church Financial Leadership Academy is an online video archive where you can find short videos on a variety of topics. And the Stewardship Navigator will help you with that narrative budget building and other stewardship resources. So those are the 2 resources I would highly encourage you to check out from the Presbyterian Foundation. I hope our time together has been helpful. I hope maybe that I was able to explain a little bit about reports and best practices. If you have questions about anything today, please put it in the Q&A. We'll later in the day, we'll be able to answer some of those questions during our live Q&A, which will be at the end of the last session. But thank you for attending. And again, let us know how we can help.
And many, many thanks to Robert. That was absolutely fantastic. I learned a lot. I think that if you happen to be in Robert's region, you are very fortunate in having him as a resource. But we're all fortunate to have him today. We got a lot of questions. The technical questions first. Yes, these sessions are being recorded. The slide decks will be made available along with the recordings. Give us a couple days, and then you'll get a link to where you can find all of those things following the program. Again, it may take us a couple days, but just look for that in the next couple days. So all of that will be available. We received a lot of questions in the Q&A. We will answer those, or as many as we can, at the very end of the day after the last session. We will have a live Q&A session where we will take a look at many of those questions that came in. If you are not able to attend during that time, we will be recording it. So it will be made available as well, and encourage you to look for that as a resource. Again, applause for Robert. Thank you so much for your expertise here. And we will take a break now for about an hour and 10 minutes, and then we will come back and we will hear from Anita Clemens talking about fund types and understanding what those are and what all those things mean. So we look forward to joining her in just over an hour. Until then, enjoy your break, and we'll see you soon.